All right, gang, it is that time of the week, the best Tuesday game you've had all week, and it's time for True Wealth Radio Show. Dave Littlejohn in studio with
Matt Dixon.
Matt.
Yes.
There we go. We're off. We got the live streaming, Facebook and YouTube. So now whatever we say is going to get recorded in more than just audio format.
It's going to be everywhere.
Right? And again, we do this mostly because Matt's so good looking. Not because of me.
Okay, I like that.
Yes,
I'll take the compliment.
We'll continue to run with that one. There's a reason I was offered a radio gig first, and that makes sense. So, look, we got a bunch of stuff going on, new data points to consider. And, I don't want to necessarily do the typical financial show today, right? Part of the reason is because I feel like some of it is almost beating a dead horse.
Not a whole lot of point in that, is there?
No. I mean, here's the good news, right? Today, strong up day in the market.
Oh, yeah. We finished, 2.5%?
Over 2.5% on the S&P, close to 3% on, I think, the Russell 1000 growth. We have seen kind of a risk-on move in the markets.
And we've seen it for, almost 30 days now?
Well, I don't know. I mean,
we've, had our luck.
Yeah, I will say no, absolutely not. We haven't seen it for 30 days, but our low, we published a low in June, right? We haven't seen lower lows since June, so it's been 30 days since kind of the low water mark.
And we've had a sidestep.
Well, we had up days and down days. I mean, there are definitely up days and down days, right? So I'm not here to suggest that it's going to only be
smooth.
Everything's okay, right? Look, it's been 30 days up. No, it hasn't. It's been 30 days of chop. Today is up. And when you go up 2.5% in a day, after 29 days of sideways, you can say it's up, right?
Yeah.
And I go, well, this, by the way, is one of the flaws in statistics, right?
Because you can kind of data fit it to how.
Yeah, it's sort of like the difference between the mean and median and mode and some of the different statistical terms, right? You can, if you're talking about investment returns, I would often caution people, look at geometric means, so it's the average of the data set over time, and you're sort of blending that instead of looking at just the starting point and the end point, right? Because here's a fun math game. Watch this. You want to see if you can have a positive average and lose money?
I actually would love to see
this. Check this example out.
Okay.
You have $100.
All right.
You lose 90%.
Okay, so now I've got $10.
Okay. Now, you turn around next year, you make 100%.
Okay.
Now, how many dollars do you have?
$20.
What's your average return between those 2 years? Negative 90 and positive 100.
You're technically up 10%.
5% average return between the 2 years, right? A negative 90 plus 100 is a 10 divided by 2, 5% per year. So your average is positive, but you're down 80%. Your geometric return is negative, but your average return is positive. You can manipulate numbers, right?
Yeah.
That's nonsense. We're not going to play that game. I want to know starting value, ending value, and then the average return spread over this. So I'm going to take my return of negative 80% divided between the two and go, well, it's 40% loss each year. It's actually not that bad. It's less than 40% per year because of the way the losses work. But your net loss over those 2 years is down 80%.
Right.
And so that's what we care about. Which measurement are we using? But this is not the show about how we can manipulate the numbers today either. Okay.
What is this show about, David? Give it to me
Well,
out of the gate.
I think
What's
on my mind is helping people to reclaim a little bit of grounding in a world that feels very upside down. Okay? And some of that is going to be talking about where are you getting your news from, and how is that feeding in your mind? How's that affecting your perception? And this is relevant because what I'm here to tell you is that the geopolitics of the day and the advertising methodology of the day, and what is the most prolific medium for advertising right now?
Fear.
The internet. It's like fear.
Yeah.
But it's the internet. It's not emotion. Fear is how you appeal oftentimes, right? Fear, greed, There's only certain motivators, right? You're seeking pleasure or avoiding pain. If you're a Tony Robbins guy,
I like that.
right?
Yeah.
That's you said. Like everything in human existence is like to either seek pleasure or avoid pain, and then we nuance it from there,
Mm-hmm.
right? And so if you're the FOMO thing, well, fear of missing out. I don't want to miss out on pleasure. It's my fear of missing out.
Mm-hmm.
Okay, well, there's a both, right? So we have different ways we slice it and dice it. But I would suggest that all of this contributes to investment psychology, and that's what drives the market. And my suspicion is that a lot of people are being tested right now because we are getting phone calls and emails and even walk-in scenarios where investors come to our office and they go, "We're going to do something. I looked at my statements and I'm down a bunch, and it feels pretty horrible."
It's always a dollar amount too, isn't it? Typically.
Yeah,
Like
that's
how
another
many-
numbers trap,
Yeah.
just so you know,
How
right?
many times has someone walked in and been like, "David, I'm down 5%. I'm really troubled." Versus, "Hey, David, I'm down one number of dollars."
Such an astute observation, Matt.
Yeah.
Because isn't it funny how when everything's going up, we measure on a relative basis, right?
Mm-hmm.
Hey, my neighbor's up 10%. Why am I only up 9?
Mm-hmm.
Okay.
Yep.
But hey,
I'm up.
my neighbor's down $10,000 and I'm down 12. Well, your neighbor has $20,000 and they're down 10. You have $50,000 and you're down 12. You are way better off than your neighbor,
Yeah.
right?
Exactly.
You have lost
Percentage
as a
wise.
percentage a lot less than your neighbor in terms of the dollars in the account. So relative versus absolute return, very, very important here in having context.
Right.
Because I would, and then there are investors that just manage to literally not care. And these are happier people in general because these things don't haunt them the same way. They just kind of look at it and shrug and go, "It's going to go up, it's going to go down. And my time horizon is long term, so I'm not going to worry about it right now." And they bump along.
And they sleep good at night too.
Yep.
Mm-hmm.
I would suggest that those people they're on something.
Mm-hmm.
Because here's my challenge to all of you out there. You find yourself watching the markets more and more and more after you've done decent research. Okay? Here's a trick question. Okay, I'm gonna frame this situation before I finish that thought. Consider for a moment, and I'm not gonna make a recommendation here, but people that listen to the show know what's one of my favorite stores on the planet?
Costco.
Oh, you nailed it too, right?
Yeah.
I love Costco.
Oh yeah.
Okay. I heard this rumor they were going to increase the cost of the hot dog to $2.50.
Did
And
you write a complaint letter?
No, but I almost shed visible tears. Then I discovered it was just a rumor, and I almost shed visible tears of joy.
Wow.
So
this is a lot to do about a hot dog.
it's just the concept
Oh,
itself,
okay.
right?
There's something iconic about spending $1.50, isn't there?
There's just something about the Costco experience. I have to say, as a subtle plug, like number 2 or 3 in the whole food chain of Costco was walking through the store the other day, and I just happened to be there. And I'm in Costco enough that I recognize a lot of the folks locally that work there, and we're friendly and all that. And I just had to pause for a moment because they came through and they were talking to us as customers, and I'll say, we'll tell you that this is unsolicited, but Costco is probably my favorite store on the planet. And I was not put up to do this, right? I just want to let you guys know, love it. Super excited that we have one locally in Roseburg, and it makes my life better.
Now I got to know something.
Yep.
How often do you go there for either a pizza or for a pre-cooked rotisserie chicken?
Pizza, almost never.
Okay.
Rotisserie chicken, probably only monthly. So not that frequent,
Yeah.
but we do lots of other stuff. And we shop there pretty regularly because kids, volume.
Mm-hmm.
Plus, they have the just random gadgets that I totally need that I didn't know I needed.
It's true.
Like, why they come up with something where I'm like, I do need a contactless charging device for the 7 cell phones that I own. Like, I have one thing that can wirelessly charge, and I'm like, but I can charge 7 things. I should get it.
Would you like to know my Costco trick?
What is the Costco trick?
So my Costco trick is I would never walk in with a cart. It's whatever my wife and I can carry out with our hands. things.
Yeah.
Because it's like, man, you walk in there with a cart, you're gonna fill it up.
Yeah. So
90% of the time, though, I have to turn around and go get a cart.
yeah, I don't. I'm pretty good about it. I'm not gonna lie. I don't just go
You have some
superfluously spend,
self-control.
but I'm not the guy that just acquire because I have too much stuff as is. I'm trying to divest of stuff. But there are occasions when I come across things like, I did need to get 9-volt batteries, and why not buy an 8-pack for the same price as a 2-pack?
The Saran wrap, it'll last you like 2 years.
Well, I never know when some punk and a flagpole are going to come together. So
There
I
you
have
go.
to do that, right? But the thing about Costco and why this matters is, so Costco is a store, remains profitable and relevant, stayed open during COVID shutdowns, was deemed essential, right? Sells a broad spectrum of consumer products that include food and everything. In fact, so much so that we were joking one time that if you had to only live in one store for the rest of your life, what would you choose? And my kids chose Costco. They're like, you can get it all, right?
There's
So-
a bed there. There's
So like,
clothing,
sometimes there's furniture, there's clothes, it's everything you need to survive is in Costco,
There's even a swing set for when you're bored.
right? And so I'm like, that's a brilliant thought there. Point being, this is a store that is highly, highly, highly likely to survive and continue to thrive. Very popular, okay? What has the stock price done this year?
I mean, it faltered a little bit, but it kind of came roaring back.
Okay, so let's look this up because it's fun. So I'm going to just go to, and anybody can follow along if you want. I'm going to go to Yahoo Finance because it's free. And you can look up Costco, and the ticker symbol on it is COST, C-O-S-T. And we're just going to enter that in real time. And so it's at $521 in after-hours trade. Year to date, it started the year at $564.
So
It's
still-
down this year.
Mhm.
Costco is negative. Now, it got really bad back in like late May, got down to about $415.
So
And it's
basically,
climbed back from
$100
there.
they're off.
But see, in April, here's the thing that throws me off. It was over $600 in the beginning of April.
Wow.
So if you bought it in April, you've lost money in it. If you bought it at the beginning of the year, you've lost money. It has gone up and down and up and down. And the question is, where do you think Costco will be 5 years from now? Do you think that they will be a stronger company, a weaker company, the same company?
They're probably going to be a stronger company.
So- This is the kind of question that I encourage investors to ask. I'm not recommending Costco to you.
Mhm.
I'm recommending that you think about how Costco gets priced. And here's the big question, right? Is Costco down in price because it's a worse company than it was a year ago?
Mhm.
Because the economy is different and it's less valuable? Or something else entirely,
Mm.
right? I have an
I
idea.
have, yeah, I do too, but I don't think you're going to let us give them that.
Obscene profit break first, right? Stick around, and we'll talk about that, and then we're going to pivot and we'll get off Costco, I promise. But first, these important messages. We'll be right back. This is David Littlejohn.
And Matt Dixon.
You got True Wealth on News Radio 93.9 FM and 1240 KUBN. And nobody leaves the comments on StreamYard. Feel free
What about you?
to hit us on, hit us up with questions while we're live. Okay. And now, a few words seem to have no live questions. Done it.
We should mention something on the radio about shoot us a text with a question.
Why do you think? I don't know if Dale hears. I think it's 673-4464 is the station number. Pretty sure 673-4464.
Text
So
us.
if folks want to call the program, we'll field live calls. Say, if you want to ask Matt questions about fishing,
This
you
is
can
the
do
time.
that. Okay. If you want to ask me questions about fishing, I'll defer to Matt. Okay. If you want to ask questions about fishing for good investments, I might still have something to say. But if it's just fishing, Matt, it's you.
Okay.
So if you're just, I see some folks are coming live right now onto the live stream. I got a screen here, so you see me look down. But if you're joining us on the live stream right now, feel free to throw anything in the comments. Try to keep an eye on that. If you've got questions that are burning, if the audio quality is still terrible, let us know. We've been monkeying with that, trying to improve it. So anyway, give us some feedback. That's great. We're trying to find ways to make the podcast better and more relevant. We are talking about Costco. Right, we're doing that. So, and we've got to remind me that when we get back from the break, pick that up and carry it forward.
All right.
Meanwhile, sometimes it's interesting when people hop on or off, and I think it's mostly Facebook.
Yeah,
I think it's mostly my page too.
I actually just messaged Heather and said, give me a report on the audio quality of YouTube live streams.
There we go. All right, gang, welcome back to the True Wealth Radio Show. Matt,
Yes.
how do we plug the podcast here?
How do you find it?
Sure, yeah, that's yeah. How do folks find this? If you're just getting onto the program right now, you're just tuning in.
They can go to YouTube and go
Yeah,
to
it's
Little
live
John
on YouTube.
Financial. They can find it there. And if they miss it today, they can go back and go to the website and go to the Educate tab and find the podcast there.
Right, so you go to littlejohnfs.com or you find it on iTunes. Just look for Little John Financial and True Wealth. Yeah, you find it there. Okay, just finishing up the thought here so we can move on with life.
All right.
And the thought was, we're talking about Costco and why. I'm not recommending Costco, just for all of you. We don't do that. That's not the point. It was an illustration of why is Costco less valuable stock today than it was at the beginning of the year.
Can I take a guess?
You take multiple guesses.
All right. Well, my first guess is going to be the entire stock market kind of started. The sentiment shifted, right? Like
Right.
people were like, "Oh, recession, inflation," and so there was a sell-off that happened across. I mean, everything basically but energy, right?
Mm-hmm.
And stuff got hammered, and Costco was just in the group, right? Like it was in the crowd that went to jail. And so it might not have thrown any rocks, but because it was there, it got hauled off.
So first of all, remember that when the markets first started to drop, it was pretty indiscriminate.
Yeah.
Lots of people were just like, I don't want to buy the market right now.
Mhm.
Sell it.
Mm-hmm.
And when you have more sellers than buyers, drives prices lower,
Mm-hmm.
right? Just like in real estate, nobody wants houses and everybody wants to sell them. The prices drop.
Think about how much Costco might be out there just in mutual funds, right? Where you're not owning Costco directly, but you own a mutual fund, and the mutual fund got sold, and so Costco got affected.
Precisely. So some of this, the sentiment, there was some psychology change where investors said, Costco to me less valuable than it was before.
Sure. There was some
Now, it doesn't matter what the rationalization is. That's the key point. The trick is that once everything's caught up in a landslide, it's going,
mm-hmm.
right? And that was kind of the issue, is that when everything goes down, like good companies go down too,
Right.
right? And so that's what we call a systemic effect, right? The whole system is bringing everything down. So you can be as diversified as you want as an investor, and your diversification doesn't really stop you when the whole system is melting down.
Mm-hmm.
Okay?
And then there was companies, where investors were kind of sniffing around saying, hey, where is their weakness? And then I think, Walmart was a good example of that, where shipping costs went way up. And then investors were like, well, Walmart already has kind of a thin margin. And so if shipping costs go up, maybe Walmart's less valuable. Then we saw that huge 20% dip in Walmart's pricing.
Yeah.
Is that accurate? I don't know.
Well, here's the thing. Sometimes reality simply becomes what it is.
Mm-hmm.
Okay? And what I mean by that is, does it matter what the cause is if it becomes a self-fulfilling prophecy?
Yeah, that's true.
Right? I mean, if everybody believes the market's going to go down and they all act accordingly, it goes down.
Yep.
Okay? Now, longer term, like significantly longer term, we're talking about 3, 4, 5, 10 years from now, I say things on this program that, and you're not supposed to pick times and dollar values, right? And because like, you can't guarantee the future. But when I say, I feel like there's a 99.9% chance that this market recovers and goes on to all-time highs sometime in the next several years.
Yes.
Why can I say that and it's not a liability statement?
Because historically, that's what happens.
Okay. Well, and so there's a couple of things, right? First of all, if it were to happen, everybody's wrong, right? Even the SEC is wrong. When you start looking on like Securities and Exchange's website, it says, here's what you need to be doing as investors to qualify as diversification and so forth. And so I'm not making a fiduciary call about the whole market. That's not what I'm saying. But I'm saying, largely speaking, the market should be higher multiple years later than it is today because the system is built to do that, right? We have an expanding money supply. The Federal Reserve is attempting to engineer inflation into the system intentionally, right? It's not an accident. It's normal. Okay? The fact that we got inflation running too hot, that was a policy gap, perhaps.
Mm-hmm.
And everybody that pretends like it was a big secret, I would suggest you're kidding yourself, right? And we've all done it. Everybody has tried to justify or rationalize a decision that they made at one point. And then they just hung on to it too long, and later on, maybe you never admitted you were wrong, but maybe in your heart you know anyway. Okay? I feel like the Federal Reserve was in that camp. Because most academics outside of the Federal Reserve System have been saying for a while, you can't print money like this without inflation. Right? I mean, like that, it's not like, oh my gosh, how did we get inflation? Well, duh, you printed trillions of dollars and told people not to go to work for a while. It's going to jack stuff up. Okay, big shocker there. The shock to me was when people would say things like the Fed going, well, we're pretty sure it's transitory.
That was a shocker. Where it's like, come on.
I think it was them hoping they could talk the market into self-fulfilling prophecy.
Okay.
Right? I think they were trying to guide with their words, and they were unsuccessful. Right? And historically speaking, that doesn't work. It can work a little bit here and there, but the markets ultimately are going to look at the truth. They're going to figure out, like, it's like the lemmings. When they start jumping, right, everybody goes. It doesn't matter what you say. Right? Like, how do you stop no, we're wrong. The only way the Fed could do something at this point would be to completely flip-flop on its position, at which point the market would have to say, essentially, oh my gosh, we've completely called what you were suggesting you would do wrong. But the Fed may be doing two damaging things at the same time if they do that, right? They're shooting their own credibility in the foot, right? And they're going to make future policy tools less effective at the same time, right? So like that's the double-edged sword of this. It's like, well, we're going to just flip our policy back 180. We need to start printing money again. And everybody goes, what? You know, we're dropping interest rates back to zero. It's like, okay, we're pouring gasoline back on this thing. And all the people that are positioned in bond holdings and stock holdings have to completely retool. Okay, that would radically alter the supply and demand in the marketplace.
How long do you think it takes before we see money printing again? Maybe not in the capacity that we saw it, leading up to this point, but I mean, do we start printing money again? And how, if so, like, are we 10 years away from that?
Man,
That's
that
a
is
question.
a really interesting question. I'm going to tap dance on that one for a second. So first, let me ask you this question.
Yeah.
Do you expect to see money printing again?
I think so.
Okay. What makes you think that might happen?
I mean, I think we drive rates up high enough to where it's like, well, maybe we got to start doing a little bit of quantitative easing to head, to try and bring the rates back down.
So, all right. I'm playing the Socratic method, right? Everybody's listening. I'm just asking Matt questions here because I'm trying to tease some things out. I have some thoughts, but I really do want to tease them out from you a little bit first.
Okay.
What are the Fed's primary interest rate tools that they can use to affect rates in the marketplace?
Give me more to that.
Okay, maybe it's more of a. Do you think quantitative easing is the first tool in the bag they'd use?
I don't think it would be the first tool, but I mean, they kind of relied on it for so long.
So I think about QE and I'm going, well, they did that in order to drive rates lower, right?
Yeah.
Artificial bond buying, that was what they were doing. There was the demand side of the curve. They were the demand side buying up all the supply from the treasury.
Mm-hmm. I mean,
But-
I guess to answer your question, maybe the first step there would be to quit hiking rates, right?
Yes.
That seems pretty
Yes,
basic.
that
would be the first
The
step.
first step, I think long before additional QE, you see that first. And then you see them raising the interbank lending rates again too, right? So let's raise that funds rate
Okay.
before we can go determine whether or not we have to start doing QE again,
Mhm.
right? So that's interesting. But good, I tapped danced long enough to get back to your original question, right? Which was how long before we can see QE again? That's the question. We'll save it for the next
Oh,
segment.
come
Yeah,
on, I
we'll-
really
it is.
want to know.
I bet, but no.
Okay.
Okay.
In the States.
But remember the question, because at the break, I have this tendency to forget.
Okay.
All right. So, and the rest of you too, you can call in or hit us online and remind us. We'll be right back to Stay Little John.
And Matt Dixon.
You got True Wealth on News Radio 93.9 FM and 1240 KQEN.
All right. Do we have
Meanwhile, I see somebody live, so I wave. Up here. Hi. Matt,
Yes.
when you're asking about, so first, I think they may have to,
I kind of think so too.
but I think it's more a question like, what's the sequence, right?
Mm-hmm.
And then why?
So part of the reason why I asked this question is we see legislation right now where the Senate is set to vote this week on passing a $56 billion, measure for chip manufacturing. So
Okay.
is that then kind of in essence, I don't know how it's structured because I haven't read on it, but is that money in essence already intended quantitative easing? Because they're flooding all of this money into the market.
So that's not my take on it, but that doesn't mean I'm right and you're wrong on this one.
It seems like a relief package, right? Like, hey, you
Well,
guys
it's like an
really-
incentive package.
It's an incentive package that acts as relief to the sector with fringes.
I mean, to me, this is no different than it's a form of market manipulation where you're picking and choosing. Like, so white chips, right?
Mhm.
And
because it will cause the economy to boost if we have availability.
well, I think the geopolitics may have something to do with it too. But the question is like, is the United States trying to put itself in a position? And I'll kind of put this on the Biden administration's feet for a second, right? Because we're at the break and I can do this. Are they trying to do a sort of a Cold War tactic with China, saying, or maybe less than that, maybe this is actually a scenario where it says, China, you can have Taiwan. Because we're going to basically try to invest in our own chip
That's
infrastructure.
true because Intel's main supplier is a Taiwanese chip.
Well, yeah, like what is it?
TWS.
Yeah, some Taiwan Semiconductor is
That
the
one.
number one,
Right.
bar none, manufacturer of chips on the
And
planet.
Intel and Nvidia committed to bringing jobs to the U.S. with these new plants.
Right.
maybe
So it's
this
like an
is-
infrastructure bid to get, but it's embedded in like the corporate payola, if you will.
Right.
So my sense is that it's unlikely to be as awesome as it could be because it's not really free market. It's government spending on pet industry.
Right, but does it act like quantitative easing? That's my question.
But it doesn't buy bonds. Right? What it
That's
does is
true.
it manipulates the price of those stocks because the government is giving favoritism to specific segments of the marketplace and to
Right.
specific players. So it's kind of like the United Auto Workers Union where Tesla's ununionized. So you see less talk about Tesla right now
Mhm.
because the government is saying, well, we need to support these other manufacturers, right? Okay, we'll follow the money.
Okay. Yeah, that makes sense. Now, where did we leave off?
All right, gang, welcome back to the True Wealth Radio Show. And I can tell you where we left off, man. Good question. Reminder, you guys can get caught back up and grab the podcast tomorrow. It's going to be live stream. There'll be, if you want to go to YouTube, you can catch the live stream. You can fish around on it through Facebook if you want to look at the feeds there and find it too. But the question that we left the break for, right, is you asked me, when will the Fed, I think you said, when will the Fed have to start quantitative easing again?
Mm-hmm.
Which there's two questions, right? The question in the question is like, first, will they have to do quantitative easing?
Right.
And then the second question is yes, then when? Okay. I'm going to answer this one in a slightly unorthodox way.
Ooh.
Have you looked at the yield curve recently?
I haven't. I think it's been a couple weeks since I saw it. Is it still inverted?
There are still inversions to the yield curve.
Wow.
Currently,
Okay.
2 to 3 year rates are higher than 10-year rates. The 20-year is higher than all of them, and it's correct. But the 30 year is below the 20, and it's nearly the same as 3-year rates.
So we've basically got two inversions.
So it's a squiggly line. It doesn't look right. Right? Now, what that tells me, and this is the thing that's a little bit unorthodox, is that longer-term rates haven't gone up, suggesting that the market doesn't think this economy is going to get big traction and that it's going to run away with inflation, and therefore you should start to lock your money in at these higher rates, right? Saying people are still willing to lock in their money for 30 years at relatively low rates.
Mm-hmm.
Okay? So that's interesting to me. If you expect an economic contraction and you think the Fed may be forced back into the scenario of having to lower rates back down, presumably below the slightly above 3% rate we're seeing on the 30-year right now. Now, the 10-year, and I'm getting these from USTreasuryYields.com, so that's not actually the Gov site, but I think it's probably reasonable. 20-year rates published as of 7/18, which is yesterday, at 3.39. 30-year rates published yesterday at 3.14, but 10-year rates lower at 2.96. Not a huge delta between all these numbers, but it is an inversion. And if you're willing to tie up money for 20 years at under 3.5%, then you have to expect that inflation isn't going to materially eat away any purchasing power.
Right. Yeah.
And like, who loans money out that long? And so I don't think banks are going to largely want to do that unless they have somebody else willing to take the risk on. Unless the perception is that that's a decent interest rate long term and rates will fall. Okay? How you get there, I'm not sure the mental gyrations to rationalize that.
Mm-hmm.
Feels too low to me. I would not make a loan to somebody else at 3% for 20 years.
No way.
I'm worried I would get paid back with peanuts when I'm paying in diamonds, you know?
Mm-hmm.
So I'm going, that, as they would say, that dog don't hunt for me.
Yeah. I mean, 3% seems really low,
Right.
for how hot inflation's been.
Especially
Because
because
look at the 30-year mortgage, right? Like,
well, 2-year money at 3.15. But so I could loan money for 2 years and get paid 3%, or 20 years and get paid 3%. I think I'll commit to 2 because if things change, at least I can refinance sooner.
right.
So that's the part where I'm like, huh. Now, how does this go back to your question, Matt?
I mean, it's using it to project out long term what's going to happen and say, well, if rates are really low right now, looking at 30-year bonds, it's like, well,
Yeah, if short term's higher than the long term, then we expect the economic activity to soften. If the economic activity softens, the Fed has to do what?
they're going to have to lower the rates.
Lower rates, or even try to lower rates
Quantitative
further
easing.
with more quantitative easing. So
That's
that's
an
the
interesting-
issue.
That's an interesting way to look at this.
And that's what I'm watching right now is what is this economy telling me? If the Fed ends up raising rates at the point that we kind of crush parts of the economy, and it needs to control inflation.
Mm-hmm.
But what's happening is that the
Yeah,
rates in
oversell.
mortgages, for example, have spiked way up, and it's creating kind of a system shock.
Mm-hmm.
And we're seeing, like, here's other things. I pointed this out in our investment committee this morning. One of the most active things for the year. The 1 month trend, negative 1 month trend. In the last month, the price of copper is down over 20%.
That's wild,
Okay.
considering.
On the 1 year trend, copper's down 24%. That means it's really accelerated recently. Now, copper's a pretty material input cost in infrastructure build out.
Yes.
So it implies that there's economic slowdown in construction. So now, interestingly enough, steel prices year to date are negative 4%, but in the last 1 month, they spiked 91%.
Really?
Yeah.
Go
Could be
figure that one.
shortages,
Oh,
could be
yeah.
other issues, right? There could be supply chain issues with that. But I find it interesting to look at some of these economic metrics.
Mhm.
We're seeing, for example, an increase in the spread between 2 year and 10 year treasuries. Okay, so 10 years getting more expensive than 2 year, or I'm sorry, if you're seeing the spread shrink, so the 10 year and 2 year is getting closer and closer to each other,
Right, where the 2 years going higher.
right?
Yeah.
That means it's unprofitable for banks potentially because the price they can lend out for versus their cost of capital
Mm-hmm.
is narrowing. So their margins between their loans, which are their assets, and their liabilities, which are deposits, is
It's getting
narrowing.
small. Yeah.
So that creates economic headwinds for financials. Financials are a significant driver
Oh yeah.
of the economy. So I think we could see a scenario where the Federal Reserve is sort of backed into the corner of not only having to raise or lower rates again, but maybe quantitative easing. It's not a great thing. Right.
No,
In
it's
my
kinda,
opinion,
it's
it's
kind of
not a
like
great
hitting the emergency button. Like, well,
But let's get real for a moment,
mhm.
okay? And I don't care which team you're on. Like you pick the left or the right. Tell me which one of them is the fiscally responsible party. And if you had an answer, I will look at that and say, well, is that your team or the other team?
Mm-hmm.
And because the trick question is, haha, nobody.
It's really
There
true.
is not a regime that hasn't outspent the prior regime in decades. Right? We are exponentially increasing spending, and that's not just at the foot of the presidency. That is in Congress.
Mm-hmm.
And I'm going, for heaven's sake, people, quantitative easing is a methodology to fund the government. You genuinely have to believe that the rest of the world is willing to continue to accept us writing kind of,
Blank checks.
well, they're sort of gray market checks, right?
Mm-hmm.
They'll cash, but you're going to get paid back with ish, right? I mean, how much are you getting paid back with the dollars that you loaned?
Or the
Not
ones that
really.
you printed.
And so the
Yeah.
question is, are you willing to tolerate that or not? And chuckle and say, well, if the other party has guns, you'll put up with it for a while. But at some point, you may just say, look, I don't have to borrow the money from you if I have better options elsewhere.
Mm.
And if you wreck your credibility on an international scale, the reality is the U.S. dollar is the only currency big enough and liquid enough and more and broadly traded across the planet for folks to be interested. But if you damage its credibility beyond repair, something else will emerge.
Mm-hmm.
And there are people out there right now that are going, see, I told you, that's what he's talking about. China wants to do that. Like, yes, and other countries wouldn't mind too. It's nice to be the world's reserve currency,
Right.
right? Because it forgives some of our financial sins because we can do economic sleight of hand through money printing. But is it real, right?
Mm-hmm.
I mean, like, should houses go up 20% in a year? Right? Really? I mean, if you're the one that owned it, you're like, woohoo!
Did your wages go up 20% this year?
Right. And if your wages go up 20% per year, did you really get a raise if everything else costs 20%
Exactly.
more
If
too?
inflation stays at 10%. Yeah,
And this incidentally is why I feel like minimum wage is really a pile, right? I don't buy it because for all of the academics out there, you have to assume that employers are all predatory. And the reality is, look around at the unemployment rate right now. Employers have to pay to get people. This is the marketplace where the employee has massive power, right? And if you don't believe me, you used to need a master's degree to be a teacher,
It's true.
right? You
Yeah.
used to need a master's degree. Right now, you need to fog a mirror.
Facts.
Okay, that's a very, I am not trying to disparage teachers. I'm trying to talk about the desperation of
And-
getting people that can be in the classroom that are qualified. And you can say, well, there's a pay problem. Said there probably is, but there's also a revenue cycle problem. Where's the money come from? Right? And if you spend it in other categories of the economy, you run out of money. You can't just keep coming back to the taxpayer and saying, spend more.
Yeah, more.
Like just make more. When but we're already spending more than we have. Where's it come from? Well, we'll just tax more. You do that, but then it shrinks the economy, and then you don't have the jobs anymore. So now you don't need the jobs, right? So like you'll just topple the scale somewhere else. So that's the issue. And long, complicated answer to, will the Fed have to quantitatively ease again? And my suspicion is, yeah, they'll probably get back into trouble again because it's very they overshoot this thing, right? We slow the economy down. All right, kill it. No, not like in a good way, like, oh, look at that home run, he killed that thing. No. Kill it like, okay, we'll raise rates so high that the economy cannot function anymore. And then people start losing their jobs as businesses struggle.
Mm-hmm.
And then we'll have to figure out how to like inject life back into this thing before it's like, let's strangle it for a while till just on the verge of death and then let it breathe again.
And then inject
And then we'll kind of slap it and give it some effort and be like, come on, wake up.
Throw it a $50 bill and say, move on.
Yeah, I'm like, dude, maybe we could have just taken a nap or something instead of trying to choke it out. Anyway, it's, what can we say, right? At the end of the day, armchair quarterbacking and stuff is all we get to do that from the radio. We're not in the policy-making position.
Right.
But I will say, I probably would have handled things a little different. And, you know, we have a track record on the radio implying that. But that's not politics, that's policy, right? Maybe it's politics, but it's not partisan politics. That's the good news. Okay, we're long. Let's take a break. When we come back, I don't know, we'll come up with something fun, right?
Yeah.
Yeah, we will. So you got to stick around and we'll make it up as we go. That's what we do. All right, until then, this is Dave Littlejohn.
And Matt Dixon.
You're listening to True Wealth on News Radio 93.9 FM at 1240 KQEN.
You know, we forgot to tell people to text us some questions.
We did. I should have looked for, nobody has sent, we have some thumbs up. That's yay. From Nick, Ted, and Rochelle. Cool. I know. The good news is, this is the happiest time of the day for me. I like the True Wealth Radio Show. I would do it more. But we really need to, I feel like we should talk to folks about how to give us the comments or the, I want to get back to call-ins. You know what? I'm going to go ask Dale this question.
Do it.
All right, but you have to talk to our audience while you do
All
this.
right, we can do that.
Keep them company or they'll be lonely.
We don't want that, now, do we? Okay. I can't actually see the comments on the phone, but leave those comments, or you can. I've got my phone, so you can text us your comments or your questions. Text it to 541-375-0898. I'll get those. We'll ask them on air. It'll be great. But I'm gonna go steal David's chair so I can see what you guys are saying. How many people do we got on here? One person watching me, 3 likes. I like it.
Right. See, I wanted to just ring right in and we'd be like, great, if you drop that box, I'm going to hang up on you. Right. Yeah. That's it.
You do it?
Okay,
Tell
here we
them
go.
we're doing it.
Hey, welcome back to the True Wealth Show where it's official. We're checking at the break, and you know what we want to start doing? So we've got the live stream going, YouTube and Facebook. Of course, we're live on the radio. And we've had people ask this before, we didn't do it for a while, but I think it's time to reintroduce to our listeners the art of the call-in.
Right? Oh, I've been waiting for this day, David.
You're like, please, let's take call-in. So,
yeah.
And it can happen a few ways, right? You can actually send us, if you wanted to go to the live stream, we get a live feed, so we can see it. You can ask questions in the live feed. Or you can call the radio program.
Or text me.
Right? And you can text, because they can now text the main line, right?
Yeah, text the main phone number.
Yep, so if you text 541-375-0898, we'll give your text. If you want to just call and bring your questions on air, we will approach them. Now, I cannot guarantee that we get it right. And here's the thing. Sometimes people call and want really specific advice, and it gets to the point where we go, we're going to have to see after class.
Mm-hmm.
But sometimes it's exactly the question that other listeners have. So we want to bring that back to the show. And the way you do that is you call. The number's 541-673-4464.
Can they find that on the internet somewhere? Is that the news reviews?
Well, it's
541 Read.
So it's Brooks. We got Brook Communications, right?
Okay.
And you can go to 541radio.com and you can get it through that way too, right? So they've got their big call line. So that's the call in line for KQEN, which is the AM side of things. But it all comes to the same place. We're broadcasting both stations. And we want to take your calls. Okay, so if you've got an investment question, if you've got a financial planning question, I will say we're not legal tax advisors nor are we attorneys, but I stayed at the Holiday Inn Express once, so every now and then somebody throws something out and you go, we have a decent idea what you're talking about here. You can stump the host, it's possible. Right? I don't know everything. Right? Matt might.
Statistically, how much do you know? 73.8%.
Yeah. Yeah. If you screen the calls to only take the ones that you know, then they're really hot, right? But if you just take all the calls, then you're going to get some that are kind of in left field. But we're pretty good librarians. That's the trick. So if you manage to stump us, then we usually are pretty good about getting the answers.
You're saying you own the art of the Google machine. Like you know how to
have Google, right? Have other resources besides Google. A bunch of great professionals in our network too. And there is something that I want to encourage all of you listening out there, right? I think it's underestimated the value of the network. Okay? When I look at the most successful people that I know, they're not the people that work the hardest or the smartest, although both of those things happen. They work hard and they work smart. But they also engage with other people that are similar in nature, right? So
and I gotta tip my hat to you. You know everyone.
You try to know lots of people.
Yeah.
If you want to be successful, you hang out with successful people. Okay. If you want successful habits, copy what successful people do. And there's books about it, and there's all kinds of resources about it. But if you find yourself saying, I really want to upgrade my life and I don't know how, look, we're just not born into the station. Right? That's the key to understand. Financially, you're not trapped. I think that is
the big misconception.
Not just a misconception, I think it's almost intentional. Right? Because it sets up an us versus them mentality, and it's so useful to folks, especially in the political science realm. If I can get you to think of you as a different category than somebody else, now I can get you to vote one way or the other. And think about the advertising, the messaging, and the methodology of like, I'm either this or that. I'm for this or against that. Right? Like we try to take complicated things and turn them into a coin flip. You're one side or the other. And it's complicated. Well, the success thing, even the definition of success isn't agreed upon, right? But I can tell you, like, if you want to be a billionaire, you should probably start by networking with billionaires, right? Sounds kind of crazy, right? And yeah, they're really hard to access, but your probability of becoming a billionaire will go up. And there's actually some really simple reasons why. For one, you'll be surrounded by a pool of resources and other people worth billions. So you can come up with some kind of idea or investment or something else, and they may decide to back it. And when you get that much horsepower behind something, it can often really balloon into something exceptional.
Mm-hmm.
So the probabilities are actually better of you becoming a billionaire. Like, I don't know, I can't validate this, but my suspicion is if you hang out with billionaires,
Mm-hmm.
it's amazing how people that like come into huge money blow it. So many athletes make big money, blow it. So many lottery winners get big money and blow it. Right? And it's like, why is money so often inherited? Like by the third generation, it's gone. Right? The first person works for it, the second person kind of hangs on to it, the third person blows through it.
Mm-hmm.
If it makes it that long. Usually doesn't make it to the second generation. It's hard to hand on value systems. Right? You pass on money, but how do you pass on the values that brought money?
That's the tricky part.
That is the tricky part. And so maybe we're less concerned about trying to figure out generational hookups, because you may end up ruining generational rather than helping them. Pass on the values more than the resources. If you pass on good values and ethics, they can develop their own resources. So go out there and build your knowledge and build your network and have good behavior, right? The reality is you can be really smart, but if you don't execute, it doesn't happen, right? Dreaming about doing something and doing something aren't the same thing.
You could have $1 million idea, and if you don't execute on it, it's just an
Right?
idea.
It's the jump to conclusions for it.
Mm-hmm.
It's like stupid Office Space reference. And that movie's officially old. That's the crazy thing. It was hilarious to me, but I'm dating myself. I'm like, oh, it's definitely an old movie. But it doesn't make it not true. Gotta execute.
Give me a final summary for the day.
Final summary for the day. If I were going through the whole show,
Yes.
first and foremost, don't let your emotions take you off the descent of a good investment. Okay?
Mm-hmm.
That's the habits of successful people are the ones that can look past the noise into the future. And if you want a bright future, copy the things that successful people do and the habits they develop, and build a network around those people so that you can duplicate it. And then down the road, learn to teach others, because you will never be better at something than if you have to teach it yourself to somebody else. So that's how I would start, is change your thinking to change yourself so that you can teach others to change. You can follow that pathway, I think you can be really successful.
I like that.
All right. Speaking of changing your thinking, if you need some additional input, Matt, how can they reach us?
Give us a ring. Call the phone number. It's 541-375-0898. Or, if it's more convenient, shoot us an email. Go to info@littlejohnfs.com.
All right, gang. Well, look, we're out of time, so we appreciate everybody tuning in. Don't forget to grab the podcast if you got caught up late. And we'll do it again same time next week. Until then, this has been David Littlejohn.
And Matt Dixon.
You've been listening to the True Up on News Radio 1240, well, 93.9 FM and 1240 KQEN. All right, gang. And now I say that is a wrap, and I hit the end broadcast button, and it tells me if it turns off now.